Hello guys, so welcome to another strategy video from ForexKits Academy. Okay, so for this particular one, it's a moving average trading video. It's a really simple process, to go about this, and I'm going to show it to you guys shortly. So yeah, so all you really need to do is to come to the indicator window here. All right. You should already know that from the previous video, and then the video on how to use MetaTrader 4. This is it, right? So once you click on F, you look for moving average. So we'll have it here. So you click on that, okay? And then this is, you have options, to set. So I like to set the first one to 200. You have simple close, leave that there, then set this to 2 pixels, right? And then click on done, okay? The 200 moving average, is basically a trend indicator. So it tells you if we're in an uptrend or in a downtrend. Okay, so you guys don't understand how to know trends, but obviously you can see that price is moving upwards here, even if we have some movement downwards, or generally price is moving upwards. And then you can see at this particular point here, we now have a confirmation, so if you have, the whole idea is if you have the 200 moving average, right, printed above candles, so candles are now forming below it and it's printed upwards here. So this is the 200 MA, okay? This is a signal that we are in a downtrend, okay? And if you have the 200 MA printed down and then you have candlestick formations upwards, that means that we are in an uptrend, okay? So clear example, look at this area here. You look at here, you can see that candlesticks were below the 200 MA. So this was a signal that we are in a downtrend. And then look at this point right here too. The 200 MA was below the candlesticks itself. So the candlesticks were above it, it was below them. So at this particular ones, we are in an uptrend. Okay. So this is just needed as an extra confirmation for you to get into trades with the golden cross strategy. So to continue, right? So the 200 MA is a trend indicator, right? So if we come here, you add the moving average again, and then type 7 there. Change the color to green, right? Change the color to green, 2 pixels, same thing. So done. Then add another one, okay? Add moving average. Change the color to 14, okay? To 14. Okay. Oh yeah, so I forgot to change the color of that one. So we change the period to 14 and then change the color to blue, right? So done. Okay. So we have that now on our chart. The whole idea behind this is, first off, the golden cross is used to trade trends. Okay, so by trend, you already know trend is when price is moving in one direction. So either we are moving upwards, right? Either we are moving up or we are doing what? We are moving downwards. Okay, so if we are moving upwards, it's called an uptrend. Okay, uptrend. If we are moving downwards, it's called what? A downtrend. Okay, downtrend. Yeah, so this is trend trading is. So we basically trade the trends, hence why we have the 200 MA, right, to keep us in check and make sure that we are always in line with the trend. Okay, so that's the whole idea behind this. So what is a golden cross? A golden cross is when we have an intersection of the green and the blue line. Okay, that's if that's the color that you choose. Okay, so you can obviously change colors, right? So the 200 is there already. So if you want to change the color for this, you can come here and change the color to whatever you want. All you have to do is to click on this color box right here, and you can even change the pixels to 3, right? So pixels 3. I can edit the next one to to 3 so you can see clearly. So once we have an intersection, so we'll have the green and the blue line intersect at some point. That means that we have to take the trade, right? So either upwards or lower. And then the way I like to do it is, once you see that us have that cross, and then you can look at the candlestick formations that we have above that level. So if we have a cross at this point, so let's say we have a cross right here, you are going to see if the candles are upwards, that means we have to take the trade higher, right? Okay, but if we have a golden cross, okay, we have a golden cross, and then we have the candle printed below where we have the golden cross, right? Something like this, that means we have to take it down. Okay, so look at where we are having the formations right after we've had the cross, and then you can take the trade in that direction. Okay, and by what I mean by candles are these things that you see on your chart. So more on candles, the open, the closures, the high and the lows, right? The information you see on every single candle is really important, but then we'll talk about that in the premium class, about candles, about market structures, chart patterns, the exact strategies that we use more in the premium class. Okay, so yeah, so let's just use an instance right here, where we have this cross. Okay, this golden cross at this point where we've crossed here. You can see that the formation of candles that we have at that point are to the upside, so would have taken a buy trade, right, and then would have been able to make all of this in profit. Okay, and then you'd see a place like this, you'd have, you know, cross here, cross here, cross here. That's because we are ranging. So by range, price is just stuck between two zones. It's not really making a push to one side, it's just going up and coming down, and then you have to avoid, you know, market scenarios like this. Okay, so on identifying ranging markets, we'll do that in the premium class, okay, because we can't fit everything in this video, right? So yeah, avoid ranging markets. Just make sure that you use the trends. And then how do you know a trend? Is to what, you know, use the 200 moving average, hence why you have the 200 moving average here. Okay, so let's look at, you know, scenarios where we would have taken trades, you know, with the golden cross strategy. Okay, so let's use here. So let's start from here and go forward. So at this point, okay, our 200 MA is below, which means that we are in an uptrend, right? So we are looking for buying opportunities, and then we'll have a cross right here. Okay, and then we can only take this cross because what the candlesticks that form right after the cross are to the upside. Okay, if you have a candlestick cross to the downside here, you're not going to take it because we are in an uptrend which has been identified by this. Okay, and then that's now confirmed by the candlestick formations that we have right after the cross, the golden cross here. So what are we to do? We have to get into a buy trade, and then we'll have gotten in right here, and then you look at how much price went for. Okay, so this is 1.2110, 1.2110 if I'm not wrong. Okay, that's even lower than where we are currently, and then we got in, let's say, so if I clear everything, yeah, so 1.2022, so 1.2022, okay, 22 to 1.2110. okay, so if you do the math, you see that this is over 100 pips. Okay, so from 20 we've touched the decimal. If you remember how we calculated pips, this is over 100 pips, you know, way over 100 pips. Okay, so we have made that by just having this golden cross, right? So at X that, let's look for another opportunity. So this is an example of a ranging market. So price is failing to break above any level. We are not making pushes higher or lower. Price is just stuck at a zone, so you definitely will not trade that. Okay, and then right here we have another cross at this point, which you won't trade because the movements that we are having right after we had that cross is to the downside, right? So you won't take that. I'm trying to teach you guys how to stay safe trading the golden cross, right? And then this is a typical example of when everything lines up. So here perfectly we'll be making pushes higher, and that's now confirmed by the 200 ms. So we are in an uptrend, okay, in an uptrend, and then we'll have a cross at this point. This is where we'll have the intersection. So at this point we'll have gotten in, and then look at how far price went up. So we'll have bought this particular trend because right where we have the golden cross, we have formations to the upside, okay, candlestick formations to the upside, and then we've confirmed that we're in an uptrend through the 200 MA. So we'd have gotten in at that point and then closed somewhere here, a whole lot of profit in the bag as well. Okay, so simple thing. And then we'll have price range again at this point, right? You can see how we have crosses almost everywhere, which you are going to avoid, you know, scenarios like that. Okay, so on how to understand trends and all of that, we'll do that in the premium class, but for now just stick with the idea, you know, using the 200 to find the trend, you know. Okay, so at this particular point here, oh yeah, so I mistakenly went back. So I think yeah, I can't even locate that. But yeah, so randomly, let's just look for another opportunity. So right here, you know, we have the 200 MA above, so that means that we are in a downtrend. And then right after we have the 200 MA close above the candles, right at this point we have the cross at the same level. Okay, so we have gotten into the trade, and then look how far price went. Okay, so from 121,750, price fell to 1.1856. So that's, I think that's 500, you know, of pips data, right, from that particular point up to here. And then you can see how impulsive that is as well. Okay, so simple information. All we had to do was just calculate, you know, wait for our 200 MA, you know, to close above that level. Okay, and then once we noticed that it's closed above that level, we had a cross, right, the golden cross, and then right after we had that confirmation, we went in for the kill. Okay, so typical example. I'll look for another example, right? So right at this point, you can see our 200 MA is below the candlestick. So if it's below, that means that we are in an uptrend, right? So that's it. And then we'll have a cross at this point, a golden cross at this point. This is where we had the intersection, and then we're having candlestick formations to the upside. So obviously we'll get into a trade, and then we would have bought the trade $200 right there, and then look at this. All of this would have been in profit for us. And then you can see how simple this is. Another one right here, 200 MA above, so that means we are in a downtrend, and then we'll have a cross at this point, right? So we'll have gotten into a sell trade, and then all of this would have been in profit. And then you can calculate, you know, the pip change from here to somewhere here. Okay, so 17160 from 1836 to 1716. Okay, and you can calculate how much. That's over 100 pips in profit. Okay, and this is how simple this trading strategy is. So the 200, you know, is here for you to identify the trend that you are in. Wait to have the cross, and then look at where we are having the formations right after the cross. If the formations are to the upside, okay, that means that we've crossed, and then you have to look for a buying opportunity. If that lines up with the fact that your 200 MA is below the candles that are being formed, that means that we are in an uptrend. You can get in for the Q and then make the profit. The reverse is the case, you know. So if you have the 200 MA above your candles, right, so that means that we are in a downtrend, right? So first confirmation, and then we'll have a golden cross, and then you notice that the candlestick formation right after we've had the cross is to the downside. You get into a trade, that's a sell trade, right? And then make all of the money in profit, because price is going to plummet from there. So this is it for this video. To learn more, of course, you know, you come to ForexKits Academy. We are going to teach you more about forex trading, you know, proper price action, proper analysis, both fundamental and technical, you know, how to get in there and do not miss any opportunity in the market, and how to wait for trades to come to you, basically. Okay, so we teach all of that in ForexKits Academy, but then these strategies are good enough to get you going. You know, you start making money, start seeing profits, and then see how profitable the foreign exchange market is. If you have any question, do not forget to reach out to us immediately, as to any of the administrators, and we'll respond immediately. See you guys later.